You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's popping off in the world of futures options? Well, let's find out together, shall we? It is time once again for TWIFO This Week in Futures Options. My name, of course, Mark Longo. Reminding you here at the top of the show, if you want to join us for options oddities after volatility views tomorrow, you want to check out the awesome pro Q&A we did yesterday, where we got into a whole bunch of fun futures options talk and more. Only one place to go, theoptionsinsider.com/pro. That'll also get your name in the hat. February rapidly drawing to a close. Listeners, get your name in the hat to win the February Pro Trading Crate, theoptionsinsider.com/pro. Place to go to learn more. As we learn who's joining us in the old CME Group hot seat today, I'm pleased to welcome back on for the first time this year our old pal, Mr. Brett Friedman from Winhall Risk Analytics by way of Option Metrics. Brett, welcome back to TWIFO, sir.
Thanks for having me.
All right, then, with the gang assembled, let's dive right on into the movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, buddy, welcome to the Movers and Shakers Report, the portion of the show where we break down what's lighting it up to the light side and to the dark side out here this week. And if you go follow us at Options on Twitter, listeners, you can see this report for yourselves. And if you're a bull, you might want to look away. A lot of red on the tape this week, listeners. In fact, this table looks, I would say, 75-25 red over green, and certainly biased. The largest percentage movers are in the red direction. So if you're looking for a little bit of green on the screen, a little ray of optimism to the upside, not going to have it for you this week. So let's kick things off in the smallest section, the light side this week, listeners. Number 5, we were just talking about this on the sister show to this one, the Futures Rundown yesterday. Physical lumber, aka dead trees. Some surprising vol in that marketplace. Number 5, up 1.45%. If you want a deeper dive into lumber, maybe some of the surprising risk limits that are still set by FCMs for lumber traders right now as a result of all the madness that popped off in that marketplace in the COVID era, then by all means, check out the futures rundown. Number 4, to the land of rates we go with the Ultra 10-year, up 1.76%. Number 3, keeping it in the rates, is the 30-year, up 2.47%. Number 2, again in the rates, it's the Ultra 30-year, up 3.28%. And the number 1 light side mover on a very meager light side week, we've got our old pal, feeder cattle, up 3.58%. Brett, I know you're all about the livestock, but any surprises for you in our light side movers this week, sir?
Not really. The lumber, obviously, lumber is a function of the fires in California, I'm assuming. They're going to have to rebuild LA, essentially, or parts of it. There's one you didn't mention that is kind of like a very niche play, and that's hot roll cold steel, which is up over 27% year to date and was up 16% last week, due to tariff potential. So all of a sudden, that market is really getting hot.
That is a hot one. For movers and shakers, we tend to limit it to what's lighting it up at CME, but you're right, on the Futures Rundown show, where we have the full panoply of trading products at our disposal, then yes, steel has been an interesting one to watch, and something we did mention there on the program yesterday. All right, to the dark side we go, an embarrassment of riches, listeners. We could do a dark 25 easily today. We will limit it to a bottom 5. Number 5, listeners, kicking it off in the ags, it is Casey Wheat, off 5.84%. Again, you could just see quite the difference. Number 5 to the upside, 1.45%. Number 5 to the dark side, caution nearly 6% just to break into the red this week. Number 4, keeping it in the ags, this corn off nearly 6%, I should say, 5.92%. Number 3, keeping it in the ags, it's Chicago wheat off 6.45%. Number 2, to the realm of the metals we go, it is palladium off 10.49%. A rough week for palladium. Only outdone by our number 1 dark side mover this week. You could probably guess it, listeners, if you've been paying attention to the headlines. It's been a rough week for crypto, a rough week for the big dog, which is Bitcoin, off nearly 14% this week, 13.95%. Brett, same question for you, sir. Any surprises or intriguing nuggets in our dark side bottom 5, sir?
Not really. The palladium, although it's kind of an industrial commodity. It's due to their, sort of newfound relationship with Russia and the potential that, sanctions could be lifted or relaxed. So we could be getting a lot of palladium and various other rare earth metals coming in from Russia, sort of alleviating that supply concern. On the non-CME side, the biggest is OJ, which is, completely collapsed, off 42% year to date, 8.5% on the week, 39% on the month. A lot of demand destruction there, as well as similar stories with coffee and cocoa. The softs have gotten destroyed. But on the CME side, palladium and Bitcoin are absolute dogs for the time being, at least.
Yeah, if you want more deep dives, of course, into good old FCOJ and coffee and all that fun cocoa, again, the sibling program to this one, the Futures Rundown, has you covered. Let's get out now to a little bit of vol action. What's lighting it up on the CVol front? Of course, you can run this report for yourselves, listeners. Just type CME and CVol into any browser. That'll get you to this dashboard. Set the high-low range to 1 week. You want to choose the aggregates tab. You want to see all the complexes aggregated together, and then you'll get this fun list. Topping our list this week, it is the Treasury yield volatility, 121.05, up about 3.5 points just today. Popping for the week. That is the high for the week. The low was 103.46, so a banger week for Treasury yield volatility. Quite the range as well. Nearly 18 points, about 17.5 points. Right below it, we have the Treasury price vol, nearly a 7, 6.94. Up 0.22 just today, so popping today. That also marks its apex for the week. Over a point range in Treasury price vol as well. You don't see that too often, especially when you're starting at a baseline of about 5.89, which is where we were a week ago in Treasury. So over a point range in Treasury vol this week, which is pretty wild. Below it, we have the aggregate Ag C vol 18.39, kind of unched today and hanging out towards the upper band of its range this week. The low was 18 even, the high 18 double, hanging out at 1839 right now. Below it, we have the aggregate metals C vol 1775, also kind of unched today. On the week, that is the low print for the week, the high 1844. So metals vol at the low end of its weekly range. Below it, we have FX, the FXC vol about 8.5, off about almost 0.1 today. On the week, set a range of 8.29 to the downside, 8.65 to the upside, hanging out 8.49 to be precise right now. Below it, we have the aggregate commodities C vol 32.81, off nearly half a point today. That is not the low for the week. The low was 32.18 set earlier this week. The high 34.87, so a bit of a range hanging out towards the lower end of its weekly range on the commodity side. And let's just not forget our old pal energy. The aggregate energy C vol 50.42, off 1.14 points just today. It's had a wild range this week as well. The low was actually 49.15, a set earlier this week. The high 55.65, hanging out also towards the lower end of this range. So a wild week on the C vol front. Treasuries pinning the needle to the upside. Ags pretty close to it. Metals, energy, and commodities towards the lower end of this range. And the FX kind of hanging out in the middle. But now it's time for us to hang out in a little bit of the old metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the shiny stuff, the world of metals. Listeners, you know where to go to find all this. CMEgroup.com/TWIFO. Once you're there, go into that drop down. You're going to go down to metals, pretty much at the bottom of the list. Then we're going to kick things off in precious because gold and silver, not enough to break into our top and bottom five, even though silver was darn close. It was number 6 this week, listeners, off 5.18%. Gold coming in off 2.29%. That'd probably be more like number 15 or so on our list because there's so much red on the screen this week. So silver pretty close to breaking into our bottom 5 this week. And also a lot of headlines going on out there, including you, Brett, putting together an interesting article over there for Option Metrics, talking about a little bit of London versus New York spread on the futures, as well as the vol going on in the metals market. What did you write about? Break it down for our listeners.
Well, it's a really an interesting phenomenon, and it only happens in physically settled commodities. And you see this kind of thing happen every couple of years, and it yields some really strange results. In the list of strange events, this is kind of one of them, at least the ramifications of this. So basically what this is called is the nylon trade, which sounds like it has to do with fabric, but it's not. It's the New York-London trade. And when the new administration came in, they threatened tariffs. And what that led to was a surge in the price of New York gold versus London gold, because reflecting the tariff. And at one point, New York gold was about $20 higher than London gold. And at one point, it was actually about $50 higher, allegedly. But that spread is normally not much, and $20 is a lot of money. So what does that yield? And it's not only that, you also had lease rates to borrow gold to take advantage of that, went from basically 0 to almost 5%. So people rushed in to arb that difference, that $20 difference. So basically what you'd have to do is buy gold in London, physical gold, and sell the New York futures, and then fulfill the contract using the London physical bars. So what does that entail? So that entails you need to get a hold, if you're in London, you need to get a hold of physical gold. This is not a paper trade. This is an actual physical trade, which involves, I assure you, I looked at the calendar, it's still 2025. you have to go to the Bank of England or have your rep go to the Bank of England and get physical gold out of their vaults underneath the bank, which is kind of like a Gringotts type thing from Harry Potter. So you get the gold, then you have to make sure that it's the wrong size, because the New York gold is 400 ounces. Excuse me, the London gold is 400 ounces. The COMEX standard is 100 ounces. Then you actually have to either reshape it or refine it or trade for it or whatever you want to do. But then you have to get it to New York somehow. Now, how do you get gold from London to New York? Well, you do it the same way you do with people. You fly it. So you put it on in the freight in commercial airliners and bring it to New York. When it lands at JFK, it's picked up by couriers and brought to repositories. I'm not kidding. This sounds like something out of Ocean's 11 or something like that, or The Italian Job, but this is exactly what goes on. So what you've been seeing over the last couple of weeks is just this massive flow of gold, of physical gold, going from London to New York to take advantage of this. Silver got in on the game as well. There's also a price diffy in silver. Normally, silver is shipped internationally via ship, but the differential was so large that they actually started flying it back and forth or back to New York. So, things get really strange sometimes in a physically settled commodity, and this is one of them that people will remember. I mean, they normally fly gold around. It's not unusual, but it's the amount that was being shipped back to the United States that's just amazing. And the really strangest part is that these tariffs, the supposed tariffs, they haven't been instituted, and the extent of them, nor whether they will even exist, is completely unknown. So this trade could very well just reverse itself over the next couple, whenever the tariff becomes, whether it is or it isn't. So strange stuff in gold and silver, to say the least.
Yeah, these are wild times. As you mentioned, the tariffs kind of throwing a bomb into everything these days, mixing up a variety of markets. It's also been leading to a lot of speculation about what's going on in gold. We'll get there in a second in terms of volume and everything else. I'm curious, Brett, gold has been flirting with some all-time highs lately. As we're kicking off the show, it's a little bit below the 2,900 level, giving back about 55 handles or about 1.85%. Since Monday, obviously, you go back to the end of our show last week, it's off a little over about 2.3%. But people have been speculating for a while, is it going to kiss that 3,000 level? It's obviously a contentious asset. We had our good buddy Carly Garner on the show last week. She is no bull of gold right now. She said gold, as I believe she said, is an accident waiting to happen. So she was not looking for more upside. Where do you stand on gold right now, sir? Are you a fan? Think we're going to hit new levels above 3,000, or you think we're heading for a pullback?
Normally, when I'm looking at, is it going to go through an even number or something, I start looking at out of the money to at the money call spreads to see whether that implied vol, whether the spread between out of the money options and at the money options has expanded. It's expanded a little, but it's not, it's nothing to write home about. So I think for the time being, it's going to go sideways to lower. And I think the sentiment is kind of reflected in, the Bitcoin. These Bitcoin kind of reacts, well, who really knows what makes Bitcoin go, but, it's kind of reacting to allegedly similar fundamentals. And as we said, Bitcoin's getting destroyed. And I think that's being reflected a little, the fundamental at least is being reflected in the gold market. So it needs new juice, basically, to make it go through 3,000. And, it'll probably come from the new administration or the not so new administration. Something out of left field will probably drive it over 3,000. But if you're looking for, geopolitical reasons or something like that, if anything, geopolitical reasons are less than they were 2 weeks ago. So I'm kind of, I guess, in her camp. I'm not so sure whether it's an accident waiting to happen, but I just don't see it going over 3,000, unless something new happens.
Let's see if there is some new juice, as you put it, out here in gold this week. We typically expect on an average week, gold to put up somewhere around 250,000 options contracts. And that's pretty much almost exactly where it is right now, 255. So gold playing by the old playbook. What's interesting is, everything in the options world these days is 0 day. It's near dated. Gold says pshaw to that, with about a little over a third, 34.5% going up in the April contract that has nearly 27 days to go. You remember when we used to trade monthly contracts? That was the norm, listeners. The notion of trading expiration day was madness. Now here we are, listeners. It's a weird thing to point out a lot of volume in a contract that has 27 days to go. That future, like we said, a little bit shy of the 2,900 handle, about 1.5 points right now. What is the vol in gold, listeners? And again, gold never been a big bastion of volatility, about 15 and 2/3 off, about almost half a point, about 0.4 out there. So that's actually a pretty decent move in gold vol, all things considered. Also backing up what we were seeing on the metal C vol, kind of pinning the needle to the downside for the week right now. In terms of skew, this is also interesting, maybe reflective of what Brett was just saying, what Carly was saying last week, that maybe for the near term, some of the momentum is to the downside in gold, because usually you come into gold and it's a question of how bid are the calls and how cheap are the puts. Nobody wants them. This week, the calls are only 1.9% bid. In the annals of gold, that is not much. And the puts are actually flat, 0.2% discount, which to me is flat. So there's no discount to the puts, and the calls are only have a modest bid to them. Again, this is in April. You go out a little bit farther, listeners, and things have a little bit more of a semblance of normalcy. You go out to, let's say, September, so you're talking about 180 days. Those calls are 7.2% bid. That's more in the, dare I say it, normal range for gold. The puts are 3.6% discounted, so starting to shape up more like we expected. But in the near term, in this kind of front month contract here, looks like it's a bit of a crapshoot where we're headed in gold, at least from how the options are shaping up. And that also is reinforced by our number one most active contract out here in gold this week, listeners. You might think, folks are interested or concerned about this, historic high level. Maybe you think something to the upside, 3,000, 2,900, 29.5. No, it's the 2,800 puts, again, going away in April. Nearly 30 days. Leading the dance this week with about 8,000 contracts trading pretty actively all week. The big day was Monday, about 2,800, 2,600 on Tuesday, 1,200 yesterday, 1,300 today. While you were talking, Brent, I went and dug up the prices for these, and they were printing this morning at around $16.60. So nearly 30 days to go, Brett, about 27 days to go. You've got $16.60 for the 2,800 puts. Does that float your boat, sir?
Yeah. Yeah, I think it's more, I hate to say it's fairly priced, but it sounds like right in the middle of the, as they say, the fairway to me. Honestly, it's kind of midland, one way or the other. There's better stuff to trade, I think.
That seems to be what the consensus is as well, because a lot of those puts seem to be going up against the 27.5, so a bit of a vertical, a 50-point vertical. Looks like they're legging into it for prices around $8.5, listeners. So maybe you like that better. Instead of just shelling out a $16.60 for the 2,800, you get into that 2,800, 27.5 for roughly half the price out there. Again, that's these puts traded pretty close to 1-to-1 all week long. So it does seem like a fair amount of that put spread was bought this week. So maybe that floats your boat a little more, listeners. You're not quite shelling out as much, but you got a little bit of downside in your back pocket. So number two, obviously the 27.5 puts, 5,600 of those. Number three, listeners, there is some upside. I was just talking about the 3,000 strike. It does seem like folks are abandoning it, though. 5,300 of those trading this week. Folks closing all week long. The big day was Tuesday, nearly 3,000. 1,500 on Monday, also closing. And only about 6,000 left on this strike. So folks have been bailing on the 3,000, which again makes sense. If you think the near-term impetus is to the downside, then you probably want to be bailing on your 3,000s there as well. Listeners, let's see what else we have going on out here in the big dog gold. Really quickly then, because silver is number 6 and because I was just chatting with our good buddy Uncle Mike, we'll do a little bit of silver here as well. If you want to go a little bit farther out, usually long-term upside is where the action is in gold. Listeners, if you go out to September, we got about 4,100 of the September 3100s going up this week. So you like those, listeners? Again, the big day for those was also Monday, 1800. 1500 today, though, against an OI of 8600. So 3300 by September expiration. That'd be an interesting rally. And then, of course, if maybe that's a little bit too far out for you in terms of strike, but not enough time, how about the 32 halves in December going up nearly 5,000 times this week, 4,766 times. All of that on Monday. Most of that closing as well. So somebody bailing on the 32 halves in December. So there is upside going up here this week, but it's all over the board. And it looks like a lot of it is folks bailing and folks piling into some 2,800 puts in April or some 2,800 27 half puts. You like any of those, listeners? Let's keep rolling. Let's go out to number 2 in the precious land. Let's talk a little bit of silver. Brett, I know you mentioned silver in your article as well. Also from a vol perspective, what's catching your eye in silver this week, sir?
Honestly, not much. The reason I mentioned silver was because it was participating in this sort of intercontinental physical play more than anything else. Again, to me, one of the most interesting things about this whole thing is that, you know, when people get into gold and silver, they expect incredible volatility levels. Silver, I can kind of see it because it's where good trades go to die. And so many traders are incredibly frustrated with that commodity that are successful in other commodities and try silver and get completely reamed. Gold is interesting to me because it's people get into it and they think that gold is making new highs. It's in the headlines that its implied volatility is relatively high, and it's not. It's a relatively sedate commodity that doesn't change around all that much during the day. It doesn't have the elements that would really merit a super high volatility. Silver, on the other hand, is more volatile intraday, or at least that's been my experience. So I can see a higher volatility on it than gold. But both of those things, especially silver, personally, I've never had any great luck with silver. It always seemed to me that there's some insiders that make some money on this and everybody else just gets picked off completely bluntly. So
that's hilarious. That's, again, the counterpoint to my co-host on the last show, Mr. Uncle Mike, who's a big silver bull, but also right in line with what Carly was saying last week as well. You said what did you say? It's a place where good trades go to die, right? And Carly last week said it's where hopes and dreams go to die. So,
it's the most frustrating commodity. It really is. It's just like, you know, and I vowed several times that I would never trade that commodity again. I really have. So,
yeah, silver having a rough time. A lot of folks not loving silver. I don't know. We need to get you folks on here with a debate against our good buddy Uncle Mike. Big silver debate, listeners. What do you think? That could be kind of interesting. You know what's not interesting this week is silver volume, listeners. I'm struggling to find only 39,000 contracts on the tape right now. By the way, silver, 31.87, off about $1.50 or about 4.4%. Since Monday, if you go back to obviously the end of our show last week, off about 5.2%. So there's some underlying movement going on. It is not resulting in any options flow, though. 39,000 contracts only. That's almost half of what you would expect on a decent week out here. And I can't even find 1,000 lot. The biggest I could find is a 990 of the 30 puts going up in April. So again, April is the time frame. Gold and silver both lining up there. Again, 31.87, it's out of the money puts in both of these. So it does seem like the impetus is to the downside. That said, the skew is a little bit different here. The calls are 5.3% bid in silver versus gold, where we said they're only about 1.9% bid. And the puts were flat in gold. The puts here are 4.3% discounted. So it's not quite as, let's say, 50-50 coin flip skew as we're seeing out there in April gold. In April silver, it is still biased to the upside. So read into that what you will, but not a ton of paper to sink our teeth into here. So Brett, we dove into the metals. What other products are on your radar? Where should we head next on the show, sir?
Oh, energy.
Wow. Don't hesitate at all, sir. I like it. All right.
You gave me a little fillip there because when I said there's better places to make money, and I asked myself, where would I go? And I'd probably go into crude oil. And crude oil has been in this sort of trading ban for a while. But again, with Again, because of Russia, et cetera, there could be a relaxation of tariffs and stuff. There could be a lot of legitimate supply flowing into the market, and we could break out of the bottom of the band. The interesting thing with crude, as I've said several times, is that when the volatility movement is asymmetrical, when crude comes off, volatility tends to spike, and that's when you get serious volatility. So currently, we're kind of at the bottom of the band. Generally, it kind of rallies from here into the mid-70s. But one of these days, if it cracks below like 68 or gets into the low 60s or something, it's got some downside potential. You'll see volatility move up into the 40 or 50 area. Currently, it's trading like in the high 20s, which is pretty low for crude oil. So if you think crude oil is going lower, it could be a double, the classic double hit. You make it on price and you make it on implied volatility. Those are the type of trades that I like, where you get they move the needle, So that's my opinion on crude oil.
Well, let's see what's moving the needle out there in energy, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the explosive world of energy. Go out to that drop down. You know where to go, cmegroup.com/TWIFO. You're going to pop out of metals, which is at the bottom of our list, and go all the way up 3 from the top to energy. Then in product family, you're going to go into crude oil and obviously WTI. We had a question on Futures Rundown this week, I think, about Brent versus WTI. WTI, obviously the big dog, especially when we're breaking down the flow going on here at CME. It's the domestic product. It's where the gauge a lot of people here in the U.S. use for crude oil. Of course, you go international, people talk Brent. Kind of to each their own out here, but obviously WTI is our focus, and it is looking pretty hot this week. Usually, we expect WTI 450,000 contracts on a decent week. Closing in on 600K right now, 597. So things are popping off in crude oil land this week. Right now, crude oil 70 1/3, kind of unched on the week, which is kind of fascinating. Of course, that only goes back to Monday. I can go dig for where WTI lines up on our chart for the week. But you know what, listeners, there are far too many names, far too small to find it here. But yes, unched since Monday, which is kind of interesting. Also, why it didn't make it into our movers and shakers this week. But nearly 600,000 contracts. It's been a while since we've seen WTI that hot, that spicy. And where is that volume going up? 35.5% going up in the April. Again, April is your huckleberry this week. Just as we were talking about, nat gas and other contracts getting very front week heavy. Here comes April to steal all the thunder. April and WTI a little bit closer to home, about 18 days to go out there. What is the volume? Might be asking in April WTI. It's about a 27 even, off slightly today, off about 1/4 of a point. That also lines up with our energy C-vol, which is coming in this week as well. In terms of skew, we have, looks like the interest, the concern, call it what you will, is lining up to the downside, which makes sense. We are kissing that 70 handle, and people like a nice psychological level. Also, if you break through that 70 handle, chances are it might be a little bit of momentum to the downside. That's probably why the puts are 8.3% bid right now, up from 6.3% bid last week. The calls last week, 3.8% cheap. Guess what? People want them even less this week, 6.4% cheap. So people are crushing the calls and scooping the puts. This looks like an old school equity skew. You say that 5 times fast, listeners. Old school equity skew out here in crude oil this week. And what is dominating the tape? What is the big dog out here in WTI this week? It is the April 65 put. So analogous to what we saw in gold, April time frame, slightly out of the money puts. This time, 65 puts going up 23,200 times. So hot day out here in a hot week, really, in WTI. The big day for these, actually Tuesday. 8,000 of these going up on Tuesday, mostly opening. 7,000 today against an OI of 17,000. So chances are they're piling in for some more. We have 3,000 on Wednesday, 5,100 on Monday. Pretty much opening all week long. So folks are liking themselves some 65 puts, also reflected in the skew. I can't pull up a price yet, listeners. I'll have to go dig in a little bit. But is that float your boat, listeners. April 65 puts, roughly 5 handles out of the money with about 18 days to go. Again, if you break through 70, there could be some momentum to get down to that 65 strike. So certainly it is an intriguing strike. If you want to go a little bit farther out, both in strike and time, how about the November 60 puts, listeners? Trading 20,434 times. Pretty much all of that today. 20,400 going up this morning against no OI to speak of. 900 contracts. So somebody opening for size on the November 60 puts. Looking at this skew out here. And that future, by the way, 67.11 in November, listeners. So 60 puts a little bit closer to that strike. Looking at the skew here, the puts have gone from 8.2% bid to 10.4% bid. So that's telling me somebody, and that's really the only thing trading out here in November, those puts. So, well, I take it back. 10,000 of the 90 calls also traded today. Wow, do we have a November 90-60 collar going up maybe? Interesting. The calls are offered. The puts are very bid. That would say it could also be a bullish risk reversal, taking advantage of that skew to sell the puts. But given the fact that those puts are even more jacked, I'm going to say the answer is no. I'll have to go dig in. Brett, we got some funky prints going up out here in WTI this week. We have the near-dated stuff. We have the 65 puts going away in 18 days, going up 23,000 times. Then if you want to get a little funkier, go all the way out to November, 20,000 of these 60 puts going up this morning, sir. Any of those float in your boat?
You know, you have a commodity here that can easily go over 100% volatility when things get insane. So, you know, with that sort of implied volatility potential, out of the money strikes are a lot more probable than you would think just, you know, looking at the screen or thinking, you know, just intuitively. You know, I've been on the right and wrong side of crude oil a couple of times, and when it starts moving, it's a freight train. And that's why you get interest in like these even numbers, $100 calls and things like that, or 60 puts, because it's very easily, you know, especially on the downside when vol starts picking up, that these strikes, you can make a lot of money in them. And you don't necessarily, you know, the thing with crude is that given the volatility swings, you don't have to wait around till expiration. You know, the thing starts coming off, vol picks up, sell it. You don't have to wait for the thing to go in the money on you, or wait around until, you know, for 6 months for this thing to expire. You know, just on a medium-term play, they're also completely viable.
Yeah, I'm looking here right now while you were talking, Brett, see if I could find some prices for those. These are the November 60 puts, listeners, and looks like they traded $3 exactly this morning, Brett. And let's see.
Yeah, I don't know.
It looks like paper might have actually been selling these for $3. We see 100 lot here, 50 lot here, in pieces all the way up to 20,400. At least the prints I could find here, these are sales. So wow. Again, the skew is that's, if you want to play the skew, you know, you get more juice with the puts and the calls. So it does line up for a bullish risk reversal skew wise. If you were drawing that big of a line in the sand in November at the 60 strike, would you be sweating it, Brett?
I wouldn't be playing it if I were involved in that strike. I probably wouldn't be playing it on a price basis. I'd be playing it on a skew basis versus at the money. And so I suspect that, you know, if a client wanted those, you know, they blew they overpaid for them versus the at the money. And I'd be going the other way on that, just on a volatility basis, because they probably overpaid for its volatility. On a price basis, again, if you're just playing it on a strict price basis, you know, crude oil does have a potential with triple-digit volatility. It really does. So it's similar to, you know, to what you were saying before about gold. You know, when people are buying, you know, thinking about like $3,300 strikes and stuff. I mean, if something happened, you know, at $3,300, that means something happened. It just didn't come out of nowhere. And volatility is going to reflect that. Similarly with a 60, something happened that's important, and volatility is going to jump out. But as a market maker, I wouldn't be playing it on price. I'd be playing it on a volatility basis versus either the call side or versus the at the money option.
Well, speaking of playing the skew, I did a little bit more digging while you were talking, and it did kind of go up the way I thought. Those earlier blocks, I guess that was later paper, small paper. I see some size prints here, 1,700 the 60 puts for 305 against 1,700 of the 90 calls. So it was a collar, Brett. They did buy the puts for about $3, sell the calls for around 60, 65 cents. They did the whole thing for about 240. That makes more sense given the way the skew is right now, that they're kind of leaning into that. So I don't know. Do you like it a little better as a collar there, Brett? Obviously, if you're doing that, you probably have futures against it.
I highly suspect there was a client that came in and a bank filled them simply because the client didn't want to do it, didn't want to take the volume risk of executing the trade. That's essentially what banks do, is they'll execute the trade for them and charge them, overcharge them on the trade. And that's what took place, undoubtedly. Why they wanted this spread, I have no idea. Whether it's a hedge or whether it's a spec.
Listeners, does that float your boat? About 240 for the 60-90 collar going all the way out to November. Again, you're at a 67 handle down. There's a 60 strike a little bit closer to the fire down there. That's why you're paying a debit for that spread. Obviously, the 90 call, not quite vestigial, but getting kind of close to it at this point out here. So kind of an interesting collar. That's kind of, when I looked at the volume, that's kind of what I thought out here. So yeah, interesting stuff out here. We don't see a ton of size collars going up in these names all the time. When we do, a lot of times it's in the ags because their skew just sets up so favorably. The puts cost nothing and the calls are jacked to high heaven. But yeah, interesting. Size collar going up in crude oil out here. And we'll get out of here, listeners, since we're talking energy. Let's go out to the big dog, the kingpin of the energy realm these days. You can't do anything in the futures or futures options realm these days without talking about nat gas. It is inescapable. Nat gas, $3.94, off 18 cents, or about 4.5% just since Monday. But it is delivering once again from a volume perspective. Even on a quiet week these days, nat gas can't stop itself from putting up 1 million contracts. 1.06 million contracts on the tape already in nat gas. Again, shy of the 4 handle again. And it's once again April, about 27 days to go. April is where the action is. The vol right now, April nat gas, 52.65, coming in 8 points. Again, when you see a big move like that in the C-vol, you got to go out to nat gas. That's usually your bellwether for the C-vol in energy. And nat gas obviously coming in on the nearer portion of the curve. You go a little bit farther out, vol's getting a little bit juicier. But again, C-vol, a 30-day measure. And that April vol, 52.65, off about 8.25 points. So nat gas vol coming back to earth a little bit. Skew-wise, the put's 4.5% cheap last week. This week, 5.5% cheap. So the put's getting cheaper. The call's kind of treading water. 7.8% bid last week. 7.7% bid this week. Even though the big dog out here are the April 4 halves, going up nearly 46,000 times this week. So by way of comparison, there are more of these April 4 halves going up than the entirety of the silver complex this week. That just shows you how much paper is going up in nat gas. It is the 10-year note of the energy complex. It is just a Leviathan. And looks like, folks, as you might expect, we're retreating a little bit this week. Folks are bailing on those April 4 halves. They started on Monday, bailing on 11,000, another 9,000 on Tuesday, 8,700 on Wednesday, and today, bailing on another 16,000, which is roughly half of our remaining OI of about 31,600. So, folks, we were talking on the show a couple of weeks ago about those 4s and how they seemed like a bit of a bridge too far when nat gas was much lower. Then, of course, we blew through the 4 handle. The 4 halves were looking pretty good. Folks made some money. Now we are retreating. Looks like folks are getting the heck out of Dodge on the rest. It's been a wild time in nat gas of late, Brett. I'm curious for you. What's catching your eye out here in the Widowmaker this week?
Well, I think they're kind of running out our own way. It's the end of February. They're expecting warmer than normal temperatures. Natural gas is a weather commodity, essentially. And it got below the 4 handle, and now it looks like it's in full. It's in retreat. Volatility is in the high 40s, something like that. So it's coming off, and it's coming off because of warm weather. It's as simple. I think it's more or less as simple as that.
You know, it's never simple, though. It's your feedback. Let's get to a little bit of that right now.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, we have a fun question of the week. I want to get your thoughts on it because it pertains very much to our number one dark side mover over here at CME this week, which is, of course, Bitcoin. But before we get there, Brett, really quickly, we had this pop up in our chat. I wanted to get your thoughts on it. It goes back to the metals where we were just talking about earlier, and, you know, your lack of love, shall we say, for silver. What do you say? Good trades go to die out there. We have one of our pro members, Mr. Unlimited, says he's a wheel fan of silver, in particular, though, SLV. He says he likes to find some decent juice selling the puts out about 9 days. If it's down 2.5%, he'll try to sell the put. And then if it rallies, he'll sell the call. So he likes SLV as a wheel candidate. Are you down for a little bit of wheel action in silver, Brett? Or are you just you like washing your hands of the whole thing?
More like the latter. It sounds like he's playing short-dated options and has been successful a couple times. Mazel tov to him.
All right, let's keep rolling out here. Let's go to, by the way, I see you folks looking for to add Brett to the Carly versus Uncle Mike. We throw Brett into the mix, debating metals. Now you're getting lopsided, though. And now you got 2-on-1 for the silver bull versus the two silver, let's say, non-bulls out there. So we might have to keep it more balanced, but maybe we'll get Mr. Unlimited here for he'll be the silver wheel voice to help out Mr. Uncle Mike. But one of our questions of the week right now, Brett, has to do with our number one loser of the week over here in our movers and shakers, which is, of course, Bitcoin. The entire crypto complex getting taken to the woodshed these days. ETH having a terrible year. If you go year to date in terms of futures assets, ETH is, number one or number two, depending on what you're looking at, off 30% for the year. So a rough week for Bitcoin, a rough year for ETH. So we thought we'd ask our audience, Brett, gun to their heads, if they had to buy and hold one crypto asset for the rest of the year, the entirety of 2025, which one are they choosing? We gave them three choices and the infamous other: Bitcoin, ETH, Solana, and other. In the other category, we've had write-ins for Doge and Monero and all kinds of fun things out there. So Brett, gun to your head. You got to buy one crypto asset and hold it for the year. Which way you going, sir?
I will say Bitcoin, but because quite honestly, that's the only one that I'm really familiar with. And most importantly, it's the only one that has enough liquidity to make me happy, that I can get in and I can get out without any, incredible spread or something like that. That's the only reason. Gun to my head, I would give you even money. I'm probably going to get shot. So.
And they think our audience is going that way as well?
No. I mean, Bitcoin people, crypto people usually have one piece of crypto, one version of it that they're really in love with, I've noticed. And usually it's, they kind of like more esoterica. So I suspect it's not Bitcoin.
I'm with you in that camp. I expected some of our altcoin to run away with it, but no, Bitcoin, 67.9%, Brett. So you have your finger on the pulse of the crypto kids out there. Going all big dog, all Bitcoin right now, which is very surprising to me. Solana, number 2, 13.6%. We've been talking about that this week. I see a few of you in the chat have been talking about nibbling on Solana. 11.1% for ETH, and then 7.4% for other, including our good buddy Mr. Griffin out here, who says, I'm all in with the naughty coin because sooner or later the crypto market is going to screw me. So there you go, listeners. Make your voice heard at Options is the place to go. Unfortunately, that music means we have to get out of here for this week. But Brett, before we go, if folks are intrigued by your analysis of gold and silver, they want to check out more of that, where should they go? What should they do?
I write weekly for OptionStrat, optionstrat.com, and I write monthly for Option Metrics, which, by the way, is where I get all my volatility data from as well. So either of those two sources, I'm in print once a week.
There you go. Check them out at either of those outlets there, listeners. If you are intrigued, you want to do a deeper dive, certainly on the metals front out here this week. We have an intriguing one. His article is called Gold is in the Air. So you can check it out for yourselves over there, listeners. Go deep with some great visuals, talk about the vol, all kinds of fun in that analysis, as well as the physical spread, logistics between New York and Les. Collier was kind of getting to that last week on the show as well. The physical side of gold and the logistics therein are difficult for a lot of people to come to grips with, and Brett points it out in that article. And of course, if you want to check out these reports we're talking about here on the show, only one place to go, cmegroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to break down the wild and woolly world of volatility. Who will join me on Vol Views? Remember, Mr. Dr. Bix is traveling abroad this week. He is in Europe for the big Eurex summit out there. So who will join me on Vol Views tomorrow? I got to tune in to find out. And then back, I kind of gave the cat out of the bag a little bit earlier when I did say our buddy Mr. Matt from Orats will be on, because he will be joining me on Options Oddities as well, a double header of Mr. Matt. He's always good for some crazy trades on Options Oddities. Should be another banger. Remember, if you haven't gotten in yet, the optionsinsider.com/pro is the place to go to join us for the Oddities party. Also gets you in tomorrow under the wire, just in time to get your name in the hat for the February Pro Trading Crate. You also get, of course, the Pro podcast feed, somewhere around 500 episodes waiting for you the second you get your hands on that feed, as well as, giveaways, live streams, all sorts of fun. The optionsinsider.com/pro. And then we're back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.